Welcome back, Accounting Boffins. You with Ashraf Patel. We're looking at the balance sheet. Remember what we said? The links, keep in mind that your adjustment will have an impact on what? It will impact on your income statement, right? And it's going to impact on the balance sheet. So, one aspect of the adjustment affects the income statement, the other affects the balance sheet. For examination purposes, you are expected to know both of them, how to complete both the statement of comprehensive income as well as the statement of financial position. In other words, income statement, balance sheet. Okay. Now remember, these are notes that you have to complete. The tangible asset note, the trade and other receivable note, your capital account note, your trade and other payables note, and obviously all of these then fit into your balance sheet, okay? Now, these are not the only notes. Remember, there's also the cash and cash equivalents. There's your interest income, interest expense. There's your inventories. So all of those are important. We're going to highlight a few of them here. And the first one we're going to be looking at is your tangible asset note. What is important in this note is the following. One, these are your balances at the beginning of the year, right? So all of this will be your balances at the beginning of the year. Okay, what do you have there? You have the cost price, you've got your accumulated depreciation, cost price minus accumulated depreciation obviously gives me my carrying value. So this would apply to all your vehicles and equipment, remembering that land and buildings does not have accumulated depreciation, right? We know that for a fact that land and buildings do not depreciate, therefore there's no accumulated depreciation for land and buildings, but obviously it's the accumulated depreciation is applicable to my vehicles and my equipment. Okay, then you have movements during the year. In other words, what happened? Did we buy more? There's your additions at cost. Did I dispose of during the year? The important part of the disposal, guys, in fact, in all our lessons, whenever we dealt with a question on asset disposal, we made it abundantly clear to you that you draw up your table, and in your table, you have an item that says disposals at carrying value. That item is what you need, or that figure is what you need to include when you are doing note number 3. There we go. Disposals at carrying value. Right. Then you bring in your depreciation for the year. With regards to depreciation, remember the 3 components of depreciation. What are they? The sold, the old, unsold, and the new, right? All 3 must be added together to give you your total depreciation for the year. Okay, now watch this. You got your carrying value at the beginning of the year, right? You add your additions at cost. You subtract. So let's take the arrow to the correct figure there. There you got, you add your additions at cost. You subtract. Let's do that in a different color. You subtract your disposals at carrying value. You subtract your depreciation for the year. And that then gives you your carrying value at the end of the year. Right. Now, this is your check. You take your cost at the end of the year, subtract your accumulated depreciation at the end of the year, and that figure has to then correspond with, so working from top to bottom, your carrying value at the beginning of the year, plus your additions at cost, less your disposals at carrying value, less your depreciation will give you that figure which is your carrying value at the end of the year. So, end of the year, cost price minus accumulated depreciation will then give you your carrying value at the end of the year. Those 2 figures, when you're working top to bottom and bottom up, has to agree. Okay. When you come to your trade and other receivables note, you start off with your trade debtors, which is your debtors control, less your provision for bad debts will give you net trade debtors. Then you bring in your income receivable or accrued income, your prepaid expenses, deposit on water and electricity, and your insurance claim, right? So, let me just explain. A deposit on water and electricity is the deposit that you've paid the local council for using their services. The moment you stop using or you don't need their services, that deposit will be refunded to you. Obviously, for example, if you have a fixed telephone line with a service provider, you pay a deposit. The day you say, thank you very much, I don't need that service anymore, the deposit is refunded to you. Therefore, your deposits, whether it be for water and electricity or whatever else it may be for, is an asset, and therefore it appears under trade and other receivables. Insurance claim, we've alluded to this in many of our lessons, but a reminder is beneficial once again. Insurance claim, that claim that you've lodged with the insurance company, they've accepted the claim, acknowledged it, but haven't paid you as yet. Therefore, that figure is part of your trade and other receivables because it indicates to you that they owe you that money. Clear? Well done. Next one. Is your capital account. Obviously, it's your balance at the beginning of the year. Bring in your additions of capital, withdrawals of capital, right? Your drawings, and obviously, you've got to also take into consideration, this is your balance at the end of the year. The one component that you need to add here, obviously, would be the profit. You would add your profit that you've made, or you would subtract the loss if the business has made a loss. So these two components obviously will also impact on your capital account note. Right, so what we have here is your balance at the beginning of the year, plus your contributions of capital, withdrawals of capital, bring in your profit or your loss, and then obviously your drawings. This will then give you your balance at the end of the year. Next note is your trade and other payables. Now, your trade and other payables note, also a very important note, and look at the information that needs to go into these notes. You need all your liabilities, your trade and other payables. Watch, it's your trade creditors, creditors control, your expenses payable or accrued expenses, right? Income received in advance, also known as deferred income, okay? Then you have all your liabilities in respect of salaries and wages. Remember, when you make your adjustment for salaries and wages, you're debiting the gross salary and you're crediting all your liabilities. Who do you owe that monies to? You owe it to, obviously, your employee, which is your creditors for salaries. You owe it to SARS, which is your PAYE. You may be owing the pension fund. You may be owing the medical aid fund. You may be owing the UIF fund. So those are all liabilities that you take into consideration. Remember another item that could appear either on the face of the balance sheet or it could appear under your trade and other payables, right? What is that? That's your short-term loan. Remember we said, we've spoken about it, where you take your non-current liability and split it up into two components, into the portion greater than 12 months, which is your non-current liability, and the amount payable within 12 months, which is your short-term loan. Right, so there's your short-term loan or your current portion of your loan, and this is an important one, very, very important one. If you have premises that you are leasing to your tenant, if that tenant has paid a deposit on that lease, right? Let's look at the entry. We're receiving money, so we debit bank. You credit deposit from tenant. It's a liability, guys. Why is it a liability? Because if the tenant's lease expires and the tenant now says, okay, I'm moving to another premises or I've bought my own premises, that deposit will have to be repaid to the tenant, and therefore it appears under trade and other payables. It is that portion that has to be repaid to your tenant, because the deposit is an upfront payment, like we had a deposit of water and electricity, which is an asset to us. The deposit that we are keeping on behalf of a property that we have leased is, by the same token, a liability, and therefore appears under trade and other payables. Okay, so if you're looking at your balance sheet in its entirety now, right? You start off with your tangible assets, which comes from note number 3, right? You add your fixed deposit, which is your financial asset, right? And those two added together will give you that asset component there, right? And then you bring in your current assets, right? And then obviously these 3 figures, what are we talking about? The non-current assets plus your current assets will give you your total assets figure, right? Now, you also must know this, that your total assets figure, that means the top half of your balance sheet, has to be in agreement or has to be the same as the bottom half of your balance sheet. Watch this here. So, before we get there, let's look at our inventories. We've dealt with inventories. It's trading stock plus consumable stores. We've dealt with trade and other receivables. And we've dealt with our cash and cash equivalents. That then gives me my total assets. So what makes up my total assets? It will be my tangible assets plus my financial asset plus my current assets. Those 3 components will be the top half of my balance sheet, giving me total assets. Keep this in mind. We said this total assets figure has to be the same as my total equity and liabilities. Now, what is it that goes into my bottom half of my balance sheet in terms of the equity? Obviously, that's your capital. We've discussed that one there. Then you come to your non-current liability. Remember the loan. We said, what about the loan? This is the one payable over a period greater than 12 months, and that becomes your non-current liability. Okay. Then you bring in your current liabilities. What do you have under current liabilities? You have your trade and other payables. We've discussed this note at length. Now, obviously, you will notice here that if your short-term loan was not included in your trade and other payables, then it has to appear as a standalone item on the face of the balance sheet, right? So depending on the question, right, and what are the requirements of it, but the easiest way to remember it is to tell yourself, right, I have trade and other payables, one item, I have my short-term loan or my current portion of my loan, and very, very, very important is my bank overdraft, right? So what type of an account is bank? The question is, what type of an account is bank? The answer is, it depends on what? On whether bank has a debit balance, favorable, or it has a credit balance, is in overdraft. Got that? So don't make any assumptions. Always check the status of your bank account, whether it is a favorable bank balance or whether it is in overdraft. Certainly, if it is a favorable bank balance, it will appear under cash and cash equivalents. But if it's not a favorable bank balance, if it's in overdraft, it will appear under my current liabilities on the face of my balance sheet as a bank overdraft. Okay, so there we go. I then add up my current liabilities to give me the total of my current liabilities. I now add my equity plus my non-current liability plus my current liability, so component 1, 2, and 3, right? So what is it? It's my equity, my non-current liabilities, and my current liabilities will then give me my total equity and liabilities. What do we know from the balance sheet? We know that our total equity and liabilities, this figure here, watch what I'm going to do here now. I'm saying that one has to be the same as my total assets. That means the top half of your balance sheet must agree with the bottom half of your balance sheet. Now, another important consideration here is sometimes you are given financial indicators to work out missing figures. Please, you must be able to do that. For example, if you are given a current ratio of 2:1, right? That means current assets is to current liabilities is 2:1. You could be asked to work out your current liabilities as a missing figure. So if you are given the current assets as 2, you know your current liabilities is 1, you can use that ratio to find out a missing figure. Keep that in mind. Very, very important for examination purposes. Okay, in conclusion, know how to deal with your fixed deposit. Know how to deal with your current liabilities. Note that your total fixed assets must be equal to your total equity and liabilities. Okay, guys? So, you can clearly see that once you start doing these activities, once you start engaging with your past papers, I promise you, you're going to start enjoying your accounting work. And once you start enjoying it, I promise you, you're going to ace it. 100% is definitely in reach. From Ashraf Patel and the team, definitely you're aiming for the moon, but whether you get there or not is not important. You'll definitely be an accounting shining star. In other words, you'll be to enable an accounting shining star. Until the next time, be good. Goodbye.